Hi, I'm Jessica Rabe, one of the co-founders of Data Trek Research. My co-founder Nick Colas and I recently had the unique opportunity of taking a guided tour of Station F, the world's largest startup campus located in Paris. Our host was Marwan Elfites, who is the head of startup programs and business services there. He very kindly gave us an hour of his time, and we came away with a fresh perspective on one of the most important issues in global capital markets. We'll explain why in this video with three findings from our visit. First, to set the stage for why Station F is so important to global equity investors, we need to show how innovation is such an important driver of long-run equity returns. This table shows the top 6 names by weighting in the S&P 500 and the MSCI Europe Equity Index using the ETF symbol IEUR. We also included when they were founded, their 10-year compounded annual total returns, and comparable index returns over the same time frame. It shows that the S&P 500 has dramatically outperformed MSCI Europe over the last 10 years with a 13.4 versus only 5.7% compounded annual total return, led by companies that were on average founded 64 years after the most valuable public companies in Europe. That shows just how powerful innovation really is. The only downside, in some investors' opinion, is that disruptive technology combined with global scale tends to capture a lot of market cap. For example, the largest 6 names in the S&P 500 are now a full 30% of the index. MSCI Europe doesn't have the same concentration risk, with only a 13% weighting to the top 6 stocks, because its largest weightings have compounded far slower than the S&P's comparable names at 12.6 versus 33.5%. This leads to our second point, which is that the only long-term solution for European stock markets is to create an ecosystem that develops entrepreneurship at scale, and that's where Station F comes in. The challenge goes well beyond just pairing founders with capital and hoping for the best. Europe is notoriously risk averse to the point of ostracizing those who try their best but still fail. The region needs places where startups have both moral support and access to intellectual and financial capital and other resources to achieve long-term success. Before we get into Station F's process, we have 2 background points. First, it was founded by French billionaire Xavier Niel, who bought an old unused train depot called Le Havre Freyssinet. Sorry, I looked up the pronunciation and yeah. Hence the Station F moniker in 2013 and converted it to its present use with 250 million euros of his own capital. Here's a picture we took of the outside of the building. His goals were to give startups a place to work, include other stakeholders like large companies and educational institutions, and give all segments of society access to Station F's resources. Second, after 4 years of building, renovations, and hiring key staff, Station F opened in 2017. The physical space itself is divided into 3 parts, which we'll show pictures of throughout this presentation. There's a public and private area in front available to select companies before they're accepted, and some third-party resources. A private section in the middle with office and resource space, and a highly regarded public restaurant at the back. We saw all 3 areas. As for Station F's results, in 2022, a chatbot turned AI company named Hugging Face became Station F's first unicorn. In the same year, Station F startups raised a record 1 billion euros. In 2023, Station F startups also raised 1 billion euros, 15% of all the capital raised by French startups last year. Now, as for how it all works, startups apply to join a founders program, which are led by a wide variety of companies, institutions, schools, and Station F itself. The admission rate runs between 6 and 9%. Once a startup is accepted, they go through 3 months of intensive programming, catering to early stage company needs, followed by up to 15 months of additional support to build the business. Commercial program partners range from consumer products like LVMH and L'Oreal, tech like Microsoft and Meta, advertising like Havas, fintech like BNB Paribas and Binance, and alternative energy such as Total. There are also educational institutions involved. Ecosystem partners include pre idea, pre team, entrepreneur first, and specific areas of interest like quantum computing. The split between corporate, university, and ecosystem programs is a third each. We'll include a link with the complete list of program partners in the description below this video. Station F adds new program partners every year to stay at the forefront of evolving technologies and offer sponsorship variety to its startups. So, hundreds of prominent global venture capital firms have relationships with Station F, including legendary names like Andreessen Horowitz, Sequoia, and Excel. To help startups navigate French government services and regulatory structures, Station F hosts officials on site. Some commercial partners have mentorship offices rather than sponsor programs. The list here includes Amazon Web Services, Apple, and Google Cloud. So if a startup needs help getting on an app store or using cloud service, assistance is just a few steps away. In addition to providing services, Station F also invests directly in select startups at the seed level. There is an offering called the Fighters Program, to attract and develop entrepreneurial talent from marginalized parts of society. Station F offers their services for free to them, which includes an intensive course of business development, master classes, and ultimately a chance for inclusion in the mainstream program and potential investment. Now, like many early stage venture firms like Y Combinator, Station F has demo days where its best companies pitch to VCs. One of those just occurred earlier this month. Lastly, here's our take on what we saw and heard in 3 points. The first, Station F is unique in its holistic approach to spurring entrepreneurship in France because it has to be. In many ways, they are starting from scratch to build interest and excitement, as well as social and commercial support for startup founders and their young companies. Essentially, Station F wants to make risk taking cool. They are also very concisely trying to avoid the pitfalls of American VC culture, which sometimes values breaking things almost as much as moving fast. Skirting government regulations to build a business is often considered acceptable in US VC circles, but it would not be welcomed in France or continental Europe. Second, the building is huge and houses a vast array of resources, a good reminder of the complexity inherent in building a successful disruptive tech company. There's a lot of survivor bias in the origin stories of businesses like Apple, Google, and Facebook. Each had a clever and disruptive core offering, making it seem like success was inevitable, but in reality, it wasn't. No one builds a great company all on their own. Third, we see Station F's success as proof of concept, not an endpoint sufficient to move the needle between the French and European startup ecosystem and that of the United States. Venture capitalists have a concept called minimal viable product. It is the bare bones of an offering that proves the soundness of an idea because it garners initial success. Station F is a fantastic MVP. To have a real impact, however, there must be many more Station Fs all across Europe. The continent is not short on intellectual capital. It lacks exactly what we saw on our tour last month: physical spaces where startups are celebrated and supported with all the resources necessary to have a chance at success. The Station F model can be replicated, but it requires a lot of financial and intellectual capital. The most straightforward answer would be for a publicly held version of Station F, funded initially by private investors and then through IPO and follow on deal proceeds. The base cash flow would come from operations with upside from venture capital investments. So the bottom line here is that our long-standing recommendation is to overweight US equities largely based on America's culture of innovation and entrepreneurship, and we stand by that view. But Station F is a glimpse into what is possible in continental Europe. When investors allocate long-term capital to the S&P 500, they're not just buying today's companies, but the promise of new and better ones in the future. A US large cap index investor 10 years ago would likely have laughed if told that a bunch of tech nerds would end up delivering much of their returns over the last decade. European equities have underperformed over this period, in large part because the region had few comparable situations. The next 10 years may be a lost cause for the continent's equity markets, but the next 20 to 50 years will come down to whether the region can embrace and build on Station F's remarkable success. With that, thank you very much for taking the time to watch this video. Please feel free to share it with anyone you think may find it useful, and please hit the like and subscribe buttons if you enjoyed it. You can check out our website, datatrekresearch.com, for a free trial to our daily reports on markets, data, and disruption. There's no credit card or personal information required, you just have to drop an email in. Thanks again for watching, and we hope you have a great day.